Why the economy is worse than ever and what is coming. Peter Schiff answered all these and many more questions about the current economic state of the USA, talking about what government can do and will do to make things more like before. Peter said that we have a democratic Congress, a democratic president. These guys are going to spend even more than Trump did, and he reminds that Trump was a record spender and record borrower plus a cheerleader for money printing. And certainly, we are going to have an even bigger cheerleader now. That's Biden there. This whole team, it's all about free this and free that. So, how the dollar is going to rise in this environment is a big question. Look at what's happening at commodity prices across the board. We have commodities hitting 5-year highs, from the industrial metals like copper to the grains, corn, wheat, soya beans. Everything is going up and up. And it's not because we have this booming economy. We still have the pandemic. This is all inflation. It is money printing that is driving the increase in prices. How the dollar can thrive in an environment like that is a big question again. Peter asked to look at what's happening to the interest rates. The 30-year treasury is knocking on the door of 2%, and if the Fed lets it get through 2%, it can make a beeline for 3 or 4, and the over-leveraged economy can't handle that higher rate, even though historically it's still low. So the Fed is going to have print as much money as necessary to artificially suppress long-term interest rates, which means massive creation of dollars to buy more treasuries. How do we get a stronger dollar when the supply of dollars is going to go through the roof? It's basic supply and demand. If we get a lot more dollars, those dollars don't become more valuable. Instead, they become less valuable. Now, talking about the $400 billion promise towards clean energy, Peter says that what these guys don't realize though is that we are broke. We can't afford to make good on the promises that we have already made, let alone the new ones that the Democrats have already bribed the electorate with. Look at what's happening. Oil prices went above 53 a barrel. Who knows where they are going to be? The prices are headed much higher for oil. People are going to be very surprised by the oil price. But the big difference, we had 100-barrel oil years ago, but that's when the US fracking boom was really going. And so we were producing a lot of our own oil. So we didn't have to import as much. But that the next time oil hits $100 a barrel, which could happen this year, we are going to be importing record amounts. Our industry is a shadow of what it was the last time oil was at 100, and it's not coming back. It's not like all of a sudden oil prices are going to go up and then we are going to start drilling again. A lot of money was lost by investors the last time because that oil was very expensive to get out of the ground. So the investment community is not going to step up again, given how much they have already lost. Plus, it's very likely that the Biden administration is going to further increase the cost of domestic production with even more regulation, which means that they don't like drilling, they don't like expiration, they don't like fracking anyway. It's going to get more expensive, and so are record trade deficits. And the trade deficit is at a record high, despite Donald Trump's promises when he campaigned. He has left the office with the trade deficit much higher than when he took office. It's record in goods. It's all-time record highs, and it's going to soar when we have to pay for $100 oil to import. So that's just going to put more downward pressure on the dollar as it puts upward pressure on trade deficits and interest rates. As more people travel, the demand for energy will pick up and people will return to traveling. It may be a more gradual return than people expect. But Peter reminds that there's also been a big reduction in supply. So you have two sides of the equation to determine the price. If the supply has gone down more than demand, prices can still go up, and that's what is going to happen. Of course, if the dollar continues to fall, which is what will happen, that increases demand for oil outside the United States. Not necessarily for travel, but for other things. And it certainly is possible that the rest of the world could start traveling long before Americans do. A weak dollar is the best thing that could happen to the emerging markets because it was a strong dollar that was so detrimental. It's the strong dollar that was hurting emerging markets because a lot of the emerging market companies have US dollar economic debt, and as the dollar strengthens, that made it harder to service the debt, certainly harder to repay it. It would put downward pressure on their currencies, which might put upward pressure on domestic inflation rates, which might force central banks to have to raise rates even if the economy was weak in order to support their currency and fight the inflation. So, according to Peter, the strong dollar was a major headwind. The weak dollar is a reversal of all that. It becomes a huge tailwind for the emerging markets. All of their dollar denominated debt becomes easier to service and cheaper to repay. If commodities go up and if they are exporting commodities, then their terms of trade improve. And of course, as their currencies start to rise now, emerging markets look more attractive to the global investors who want to participate in those strengthening currencies, so the money flows into those markets. And why the emerging markets are going to be particularly strong this time is because if we go back to the last time, there was a lot of money flowing into the emerging markets when there was a weak dollar. A lot of these emerging market governments and central banks were worried that their currencies were getting too strong and they had the currency war. Everybody was worried that they would somehow lose a competitive edge in exporting to the US, and so they were trying to fight the rising currencies. It doesn't look like they are going to do that this time. These emerging markets are going to be happy to see the US dollar decline. So guys, this is the end of the video. If you found this video really informative, then please make sure to like this video, and if you want more such financial videos, then please make sure to subscribe to our channel and press that bell button. I'll see you in my next video. Till then, have a nice day.